A December rate cut is not new from CBA's economists. They've had about the earliest prediction for a while. But today they backed it up with some graphs to show that inflation has been licked. First, the Melbourne Institute Inflation Gauge, which is a long-standing preview of the ABS Consumer Price Index, is well below 3%. And second, NAB's survey of business prices, another good predictor of the CPI, increased 0.5% in the September quarter, so an annual rate of just 2%. And finally, the number of ABS categories seeing price increases of more than 3% is down to 40%, while those with prices rising less than 2% are up to half. Meanwhile, China is struggling with deflation. The wholesale or producer price index came out today and it's declined for 24 months in a row. That means China has had wholesale price deflation for 2 years. The government's effort to deal with this is being rolled out like a Netflix series. Episodes 1 and 2 were boring. Episode 3 was on Saturday, also boring. The Ministry of Finance announced vague increased support for deeply indebted local governments, selling some bonds to raise capital for banks, vague support for the real estate market, and even vaguer targeted support to key groups in the population, whatever that means. For dollar figures, we must await episode 4 this weekend. But anyway, the markets were happy today. Mining stocks went for a trot, lifting the All Ordinaries a bit. Webjet was more web than jet after a shocking trading update. The Shanghai market went up. Iron ore jumped 3%. And the Aussie dollar didn't do anything because the higher iron ore price was offset by the coming rate cut. And that's finance.